What's up, YouTubers? It's me, Johnny. Tonight I want to talk about price controls. You're starting to see more and more hints from the United States government, the EU, and especially countries in the developing world talk about price controls to put a brake on this inflation we're seeing. Anyways, that's what I'm seeing. I'm not saying it's going to happen, but there's more and more countries talking about price controls. And I think that's going to really create an interesting environment. Right now in the United States, now I'm not in the United States, but for people in the States, I notice rents are going up. I want to say in the Phoenix area, rents are up 10 to 15%. Someone had told me a lot of housing, well, some housing in some parts are up 20%. I'm not sure. Last time I was there, it was like 20%. Anyhow, it's looking like, to me, the cost of living in large parts of the U.S. is going to go through the roof. It's going to level off. And then next year, I expect inflation to be lower than this year. This year, it's come out to about, I think, 7%. I think there's a pretty good chance that inflation is going to come in next year under 6 or 5%. Now, if rents go up 10 or 12% and then they go up another 6, 7, 8%, the cost of living is going to go up higher than what the posted inflation is. And I do think that's going to hurt. There used to be a thing called the misery index, which is, I think, inflation plus unemployment. And the last unemployment numbers that came out weren't too good. Well, they were good. The employment numbers came out better than expected. At least that's my understanding. But when they seasonally adjust them, I think they're going to go back down, or unemployment's going to go back up. I think when you adjust for the seasonality, we're going to see a little bit higher unemployment. And I think we're kind of bottoming out, and we're going to see unemployment go back up. One thing we're going to see is a lot of people will not have the skills for the new jobs that are available. So I think that's part of the reason unemployment's going to go up. Also, too, I think we're going to see more and more automation. We're going to see more and more, I don't know what to call it, AI. Some people are calling it AI. I call it AI, and computer software programs are going to take away a lot of jobs. So I see that going forward. But anyways, while that's going on, I personally think the governments of the world are going to continually to print more money. Maybe they're going to slow it down right now with a little taper, and then they're going to, as the economy unwinds and slows down, they're going to keep pushing things up, or inflation-wise, or money printing-wise. So what I've been hearing from like Turkey to the U.S. to the EU is price controls. Now, I don't know that they're going to how they're going to do it or how they're going to spring it, but I would suggest, if you live in a first world country, prepare yourself for price controls and prepare yourself for more shortages. Now, I think personally, the shortages are going to come. If we do price controls, you'll see more shortages, obviously, but the reason you're going to see more shortages, even without price controls, is because of, the infrastructure for stuff coming into the States and the EU, but I'll concentrate more on the United States. The infrastructure in the States is not going to allow for more ships coming in to be unloaded and all that. So I would guess that's going to lead to more shortages. Not only that, even with the rate of inflation coming down, a lot of inputs for commodities and stuff, especially for food, is going to keep going up. So I expect like rents and food and energy costs are going to continue to go up in the United States. I expect even in the EU that's going to be the case. In fact, I expect energy prices in the EU, like natural gas, things of that nature, they're not going to come down and stay down. I think they're going to maybe come down and then go back up. And I doubt in Europe they'll even come down much. Maybe not even much in the United States. We'll have to wait and see. Today we had a down day in the markets. So if the correction continues, we could see lower energy prices and things like that, but I don't think they'll stay down for long. I personally think energy prices are going to go up, not because of inflation, but mainly because the infrastructure for investment in energy has been down for like over a decade. Some cases for some companies, 20 years. So just as a matter of fact, if my numbers are right, I think last year we produced 12 million barrels of oil in the U.S. I think this year we're going to end up producing about 11 million barrels of oil, so down 10% or 9%, something like that. My point is the trend is there's less energy going to be coming out of the ground, at least in the States. Anyhow, that's could potentially lead to much, much higher prices, mainly because there hasn't been any investment in infrastructure in the oil patch and natural gas and things like that, not to mention nuclear and things like that. So anyways, I think that's going to be one of the big trends, well, one of many trends we're going to see in the States, where you could potentially see more and more government intervention into the market because of cost of living going up for average people, which will incentivize the politicians to do a lot of stupid things. That's just one. And another big thing I've been talking about and expressing my view on is the dollar is going to continue to strengthen. And I don't know if it's going to strengthen a lot, but it's going to strengthen enough that could cause a potential problem in one of the emerging markets. Now, just today, there's more bad news in Turkey. I think the Turkish lira got up to 14. I want to say something like that, 14 to 1 to the dollar. I was looking at the Mexican pesos at 20.99, almost 21. It's coming down from not quite 22, but it's coming down from not quite hitting 22. It's at 20.99 or almost 21. So I think that trend is going to continue where potentially these emerging market currencies are going to sell off. And as a matter of fact, if I remember right, the Brazilian real is at 5.6. And I'm not sure where the Colombian peso is, but from some of the economic numbers that have been coming out of Brazil and Colombia, it's not looking good for those countries. It's more looking bad for Brazil compared to Colombia. But it would not surprise me if there was a policy error on the part of their central banks, and we'll see a bigger sell-off in those currencies. I haven't even looked at the Chilean peso, the Uruguayan peso, the Paraguayan guarani. I think that's what they got there, and things like that. But I don't know if the sell-off in the emerging market currencies will be enough to cover the cost of living if you live in these countries. I just know if you do live in these countries, you're going to want to have a dollar-based income to better keep up with the price increases. As a matter of fact, just today, Burma or Myanmar just announced that they're going to start using, well, the Burmese opposition party said they want to use a stable coin, the US dollar stable coin. And I see that as a trend that's going to continue. Either countries are going to abandon their currency and they're going to go for the dollar, or they're going to abandon their currency and they're going to use stable coins and they're going to use US dollar stable coins. And I think the US government wants to embrace that. I don't think they're against it at all. I think that's what the regulators are going towards. They want stable coins that will help offset the inflation that the US government does. I think that's why they're not going to really be hostile to stable coins. They just want to regulate the heck out of them, basically control them, centralize them. So I do see Burma or Myanmar doing that more, or countries like Myanmar doing that more. They're going to walk away. Like even in Afghanistan, that's the case. It's not an official dollar, but they're using the dollar in Afghanistan. It's the same thing in Venezuela. Venezuela is encouraging its citizens to trade in dollars and stable coins. So I think that's basically going to happen in Argentina. So more and more people will be living and working and earning income in stable coins. And I think the U.S. government and the EU will want people to embrace that. I suspect in the EU countries or countries near the EU, they'll want to embrace some euro stable coin. I don't know how many there are, but ultimately I think most of these countries that are going to lose their currency are going to be the developing world countries, and they're going to embrace the US dollar stablecoin, not the euro. So I see that as being kind of a big thing, and that will help the US government offset a lot of their inflationary policies, at least in the US, if more and more countries embrace US dollar stablecoins. That is why I don't embrace the view that the US dollar is going to fall off a cliff, inflate overnight, and just disappear. No, it'll be inflated, the policymakers will continue to inflate it, but I don't think it's going to collapse. There's going to just be too many people that want to do business in dollars, despite what you hear in the media. And if you do hold dollars, you're going to profit from that. But ultimately, long term, you're going to want to hold assets that appreciate against the dollar debasement. You know, like real estate, gold, certain large cap companies in the US, like large cap tech like Microsoft and Apple, and up to, and I'd even throw in Bitcoin and Ethereum in there and Solana, things like that. But that's beyond the scope of this video. Anyhow, like, share, subscribe, and leave a comment.